Hi guys, Max here, back for our daily market updates. Of course, yesterday was sort of tame in the markets actually, but it wasn't really too good. So what actually happened? Well, the S&P 500 fell by about 0.4%. The Nasdaq fell by 1.2%. So obviously by that you can sort of tell that tech did comparatively far worse than the rest of the markets. And just to extend that narrative, the Dow Jones saw pretty much no change at all, no rise or fall. So yeah, old industries did a little bit better. That same sort of trend that actually we've been seeing all year now. Tech has been getting hit really hard, while oil, banks, financials, consumer defensives, those sort of companies have been falling too, yes, but by far less than those high valued companies like DocuSign, but also big real tech companies like Apple, Microsoft, Amazon, and things like that. Now, the rest of the world actually did okay. The MSCI World Index fell by only 0.1%, so the rest of the world obviously picked up a bit. The FTSE 100 rose by 0.4%. The Stock 600 was pretty much neutral but rose by 0.04% by the end of the day, and the Nikkei rose by 0.5% as well. So yeah, the US did quite poorly then. Now, why were stocks bad yesterday specifically? Well, there were lots of talk of fears of China's slowdown. COVID is obviously just exploding over there in that country. We got a bunch of new data and new statistics that are quite worrying. There were 0 cars sold in Shanghai over the last month in a city of 20 million people. Literally not a single car was sold. That's really worrying for the state of the Chinese economy. We also got some data regarding the industrial output of China, and of course it has tanked over the last few months, what with factories and just everything being shut down due to these COVID lockdowns. To make matters even worse though, and the thing that's really worrying in my point of view, is the fact that China's consumer spending was the lowest it's been since the pandemic started. That means it's lower than it was at the worst point of 2020, when there were, of course, also loads and loads of lockdowns. It's gotten even worse than that point today. In short, the Chinese economy is really bad, and that's bad for the rest of the world and their economy as well. We also saw the New York economy getting slightly bad. We had some data come out surrounding that, and it wasn't great. Now, this is regarding New York State, not the city, by the way, but manufacturing levels fell last month. That's, of course, not a very good sign and a potential sign of a recession in the US. I personally think it probably is, but this isn't unanimous. Funnily enough, New York is also getting a little bit worried about the state of COVID once more, and there are fears of new lockdowns as COVID cases have been spiking again. In my personal opinion, and this is completely baseless, this is not based on any data or anything like that, just what I think will happen. I think we're sort of past that. I don't think we're going to have any more major lockdowns in the West, but if we do, that's obviously awful for the economy. Now, there is one huge caveat there. It would actually be good for the markets if those lockdowns come with swathes of new government stimulus like we saw back in 2020 and 2021. If the money printer is turned on, if the Federal Reserve turns back on quantitative easing, that would actually be really good for stocks, for the same reason it was a good year in 2020 to actually stay invested in the markets, despite the fact we saw the sharpest and shortest market crashes and recessions of all time. Now, while that would be good for stocks in the short term, it would be absolutely awful for inflation, and so therefore awful for the economy in the long term, and thus stocks in the long term too. But people don't really care about the long term anymore. It's all about the next 6 months to a year. Now, Goldman Sachs came out and said that the time has come to prepare for a recession. They said that the risk is, and I quote, very high. The market is now estimating a 40% chance of a recession though, so this isn't unanimous, as I said earlier. Now, yesterday alone, the dollar lost a very little bit of its strength, and that is slightly good for the rest of the world. The pound is currently sitting at $1.23, and the euro at $1.04, though the dollar is still obviously insanely strong, as you can see from those figures, and we've yet to see a real reversal of that strengthening dollar trend. Bond yields are staying pretty high, with the US 10-year Treasury yield staying just below 3% though, down 3 basis points yesterday to 2.88%. I still personally think it's going to go higher again. I do think it will go well above 3% in the near future, and we will see that figure soon enough. Oil prices unfortunately spiked quite a large amount over the weekend, going back up to a pretty damn high level. Right now, WTI crude oil is sitting at $114 a barrel, up 3% over yesterday alone, and Brent crude oil is sitting at $115. We also saw natural gas prices in the US rise by 5% alone yesterday. It is clear, in my opinion, that the energy crisis is not at all over. Now, gold was slightly up for the day too, up about 1%, now sitting at $1,825 an ounce. Finally, for our quick little updates on markets, what happened with the crypto market then? Well, the crypto market is still very weak. Luna is still dead. We did see some news that Binance had invested $1.6 billion into Luna, and that's now worth about $3,000, which is a big oof. Bitcoin is currently sitting at almost exactly $30,000 right now, and Ethereum at about $2,000, which is slightly up from yesterday, about 3 or 4%, but far below where we were before Luna crashed everything. The story for the altcoin market is really the same, far lower than it was a couple of weeks ago, but higher than the lowest points following that huge amount of fear that we got when Luna crashed and stablecoins were depegging. Now, as for some little random bits of news that came up, Michael Burry has a short position against Apple. Yes, Apple, that company, and it's actually his biggest position in his portfolio right now. Now, Apple stock has been falling. It's down about 18% year to date, but that's still a pretty risky bet to make that it's going to continue to fall, in my personal opinion. Apple is a great business, I'm sure you know this. It's actually fairly reasonably priced too, and it's falling mostly due to the macro environment that it's operating within. I do personally actually expect it to continue to fall, but there are just so many better options to short, in my opinion, and if the Fed starts printing money again, which is a possibility, Apple will boom without a doubt. So I do think this is a pretty risky bet by Burry, and I don't think it's really on form for him. It doesn't really make sense with what he's usually doing. Maybe I'll make a full video on this, on Burry's portfolio, on what his new filings reveal. Let me know in the comments down below. We also got some news that McDonald's is leaving the Russian market entirely, and for the foreseeable future, they are not penning in a date for them to return, maybe when the war in Ukraine ends. They're writing off about $1.4 billion for this action. They've been in the country for 30 years now, and this will impact their earnings, though let's be honest, not by a huge amount. In reality though, I think we should expect more things like this, but not only with Russia, but with China as well. Geopolitics is notoriously incredibly complicated, but many companies will have to choose where to operate, and of course, there's just more money in the West for the most part. We got some news about Sam Bankman-Fried, the founder of FTX, who likes to go by SBF. He bought a large amount of Robinhood, about 7% of the company, I think, and I might make a short video on that too. Again, let me know down below in the comments. In short though, he's a wealthy crypto billionaire, and Robinhood is valued extremely low right now, like really low when looking at the actual fundamentals, and SBF, as he's called, bought into the company. He probably saw a good opportunity. This may be just some random investment, he might just like the company, but it's also possible that he plans to work with Robinhood in the future and maybe combine the two with some kind of services. He and his investment crypto company FTX mostly focuses on institutional investing for large companies regarding crypto. Maybe he wants to do that sort of thing with stocks and Robinhood in the future. Again, let me know if you want to hear more about this shortly. Now, I did make a quick video about Twitter a couple of days ago, and the markets opened and reacted to that news, and Twitter shares fell by about 8% yesterday. They're now sitting at about $37 per share right now, which means that if this Twitter deal does happen, and again, this is not a sure thing, don't forget, that would be a 45% return, selling to Elon at $54 each. The market is of course then pricing in either a failed deal or just a discounted price that Elon actually ends up paying. Now, we did also get more Elon stuff happening over the weekend, but we've spoken about him a lot recently. We had more Twitter drama. I might make a video on it soon if you want that, but let me know if you don't. Maybe I should put it onto the Stoic Politics channel. Again, just let me know your comments down below. He also went in on the All In podcast live event and had some really pretty interesting things today, so there is loads to talk about. Now that is it for the day, but of course you can see behind me, this is my new studio. It's not quite decorated, but the fundamentals are in, the electrics are in. I'm waiting on a couple of lights so I can just improve the state of the filming a bit, but really I'm mostly settled into my new place. So for the future, videos are going to start being consistent again. We're going to have our daily updates every day, and then hopefully second videos in the a few hours later in the afternoon for me. Also, hopefully the sound is all right. There is a bit of construction going on over there, and hopefully you can't really hear any of that. If you like this video, then make sure to like, comment, and subscribe to bless the YouTube algorithm. If you want more content like this, then check out our Patreon and join our community of investors. You get access to our Discord server and exclusive content like insight into my portfolio and buy and sell alerts for all my own investments. Of course, make sure to check out the link in the description to Masterworks. It can help you protect your portfolio against market turmoil through fractional shares of art from world famous artists like Banksy. Art has historically proven to be uncorrelated to the markets, so it's a really valuable resource with the markets, crypto and stocks falling every week. There's also a link in the description to BlockFi, which will give you up to $250 in free Bitcoin when you use it. You can also get interest on your crypto, so it's earning you money while it sits there. Thank you all for watching. Stay stoic. Until next time.